let's get across to Titan. After the numbers, the management spoke to us. Here are the slice of that conversation.
I think we were pretty satisfied with the growth number. And we all know that Indians love for gold, but in this quarter, it was far more pronounced. After custom duty cut, we saw, a lot of customers and consumers coming back and the wedding customers, etc. But preference has been more towards gold, jewelry, and gold coins also have gone up into the mix. While studded has been selling, but if you look at like to like, the percentage mix has come down by kind of 3%, and that has impacted margin. The gold high price reduces diamond jewelry margin to some extent because of the gold content there. All these have led to, and with the high prices of the gold, of course, every jeweler is trying to make it more attractive through offering exchange program or some kind of discounts on gold prices. So we also kind of have offered some of those schemes during the quarter. And this kind of trend looks like that it is going to be there for some more time. We have seen festive season extremely, again, well received and have gone very well. But the gold continues to dominate the theme. And that is what led us to kind of reduce our guidance for FY25, that 11 to 11.5% for jewelry EBIT margin seems to be more realistic for us to strive and deliver.
Okay. Okay. And I will come to the revenue growth outlook as well, because it was not just a strong quarter. I'm presuming the festive season plus the wedding season would ensure strong quarter 3 too. But like I said, I wanted to get the one or two concerns out of the way first. For a mammoth company like Titan to lower their margin guidance means the competition is serious. Now, my question to you is, or rather the discounting is serious by competition is what I mean to say. Would you reckon this could be short-lived, sir? Or could it last beyond a quarter or two as well? Any thoughts on this?
Very difficult to predict that, but what I believe more than competition at this point of time, it was the product mix which was impacting our margin, where gold is kind of, as I told you in the beginning, that people are preferring gold more over, to some extent, diamond jewelry. While diamond jewelry on a particular price point, we have talked about buyer growth, etc., have done extremely well. It is the high caratage solitaire where we are seeing some pressure, and people are still sitting on fence and waiting for the noise and price equation to settle down, which way the high caratage solitaire prices will go. Competition is, of course, there. It is slightly more at this point of time, and you need to kind of respond to that through some of the sometimes schemes and offer, and a little bit more advertising and marketing. But I don't think that's a major reason for at our scale to be calling out for reason for our margin decline.
Okay, so but the fact that you've lowered it to a slightly lower band, you're not too concerned. You think that's normal. It's about 100 basis points lower, right, than the band. It's effectively the result of the miss in Q2 itself, and therefore would the new normal still be higher than the band that you've given?
So FY25 next 2 quarters we are far more confident and visible. Margin is something, very, very sometimes difficult, while our scale now gives us leeway to pull many levers to kind of maintain and deliver a stable margin. But we still wanted to wait for 2 more quarters to give stability of margin guidance. And
Got it. Yeah. Okay. Now, to the good part. I mean, the numbers, the revenue numbers look solid in Q2. I would presume that 2 festivals rolled into one in the current month itself, and the month gone by would have meant that October might have been good. We are speaking after October. Give us some sense of whatever little you can about how good October was. And also, question 2 rolled into that is this. I was told by many garment manufacturers, Mr. Sonthalia, that this upcoming or ensuing wedding season is the longest that we've seen in Indian history. It will last till May, possibly even July. Would love to know how bullish are you on the upcoming next 2 or 3 quarters?
So yeah, no, I think you are right that wedding season is much more stronger compared to earlier years this time. One is also that some of the wedding muhurts have also shifted towards this. Like quarter one was very muted, and we also saw that once the gold prices cooled off because of custom duty reduction for some time, after that again they have gone up. But a lot of wedding buyers also came that point of time, rather waiting for 3 4 months closer to wedding. They kind of made their purchases in August, September before Shraddh period, and that was also reason for a good growth, which we have witnessed, or the industry has witnessed more than us. Going forward, festive has gone extremely satisfying. We are very happy, not only for the jewelry, but across consumer categories. We are a lifestyle company, deal with many more categories. I think we are very, very happy with the way festive of 31 days, which we count like to like, compared to last year 31 days, have gone very well. Momentum looks like continuing now on the back of wedding season have started, which would go up to 15 December to my mind. So we are very, very positive for quarter three growth.
Okay.
For sure, we believe quarter four also will not be disappointing to industry or anyone else.
Noted. And that kind of maybe came out in the con call as well. Just one last question. This something has perplexed a lot of people. You, of course, stated that lab-grown diamonds are not having a material impact on the business. Could this have longer-term implications, Mr. Sonthalia? I mean, for no less than Trent, which is also a group company of the Tata Group, to come out and say that we are going to retail, lab-grown diamonds as well. Could it have a material impact on diamond demand over the long term? Or is it more like how imitation jewelry came in, that yes, it was a cheaper alternative, but people still stuck to original jewelry?
The preciousness, rarity, and the investment angle are still very strong for natural diamond and gold jewelry, which LGD somehow or the other not able to attain because of the continuous declining prices for that category. Having said that, LGD is not like the earlier CZ or Diamantine or those kind of thing. It is a good quality product grown in lab, have a good kind of attributes like diamond. But having said that, we it's very difficult to project the trajectory. While we spoke about Trent getting into POM, and we also explained for a big box retailer, it is right for them to keep experimenting what the consumers who are walking in would like to do. And like we also do perfume, they do perfume, we do women's bag, they do women's bag, we do ethnic wear, tanera, salwar kameez, they do also that. But we are a category player. Whichever product we do, they are exclusive. We build brand. We do exclusive outlets for those categories. So there is a difference in approach, and that difference should be appreciated. Both companies are, in a way, free to pursue their strategies. And we are very, very keenly watching lab-grown diamond. Very difficult. Some of the questions which you are raising are the questions for us also to kind of have a clear view. And it's an important matter. And we will talk more when we are ready to talk.